The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Let's take a look at some of these things that we're watching this morning, the German DAX and also the FTSE. You'll see they haven't gone crazy like we have here, but that doesn't mean they can't go crazy in the future. We'll just take a quick look here. Folks, I want to make a couple of comments here. You know, I've been doing this for a very, very long time, and I don't look at fundamentals. I quit looking at fundamentals way back when I was in graduate school. I had a mentor, Jim Noblet, and he was the one that got me started in speculation back in 1961. And I would go into his office, and he had a parrot named Oscar. And anyway, he got because he was a college professor. He got the Wall Street Journal for free, and he would use the Wall Street Journal as the bottom of the birdcage for the parrot. And every time, you'd ask him about fundamentals, he would point to that parrot and say, "That's the only good part about fundamentals is it works as a good thing, liner for the bottom of the birdcage." Folks, I get a little skeptical at times. Oh, by the way, I want to make one other comment here. Hey, thank you for the emails that I got yesterday, because I know I felt bad because, we had sold that S&P at 38.23 and it dropped 80 handles, and I made the decision we were going to go for a big one, and it didn't work out that way. It didn't lose anything, but unfortunately, that's neither here nor there. That's what happened with it, so we'll see what happens in the future. But I appreciate that. The soybean trade that we did worked out really good. It's up over 30 cents and looks like it's going higher. And the Euro trade, we didn't get filled in that, but we did get filled in it just a few minutes ago, so that's good. Anyway, those are things happen. Yeah, that's right. But stuff happens, that's for sure. All right, now let's talk just a second here about a couple of things. One is that talking about all the emotionalism, and I see Google, and I know I had that big jump. I see the big jump up now that it had yesterday. And remember, folks, sometimes what you see is not what it is. But anyway, take a look at the Treasury bonds here on the daily. Go back to March of last year when they were talking about, well, we've got negative interest rates coming. Look what's happened, folks. I mean, in a year where we're 10 months into this and bonds are dropping, interest rates are not going higher, they're going lower. And let's try that again. Interest rates are not going lower, they're going higher. And that's why that's why the charts are helpful. Now look at this. We broke down here badly here. We went from 174 down to 168, and we've gone nowhere for 5 days. Folks, either that's a major bottom coming in here or we're getting ready to accelerate to the downside. Okay, that's the main thing that I'm watching right now. Okay, now going back years ago, let's just talk about years ago. Let me get it up here and let you show you. This was the main thing that ran the markets. It wasn't the money. It wasn't the jobs numbers or any of those other economic things. It was the money supply, M1, M2, that kind of thing. And this is year-over-year change in the money supply. In other words, there's a lot of money out there, and if it starts to move like it looks like it's going to, things are going to change. And that usually means that inflation is going to be down the road just a little bit. Now, I know no one can see inflation coming, but there's a possibility of it, and whether it'll happen or not, I don't know. By the way, we have Tim Bost as our guest this morning. Tim has been really spot on, and we've had him on every 2 weeks, and he's given us a really, really great information on some of these things. So we want to be able to be watching it very closely. Someone's just asked me, to post the soybean thing that we were looking at yesterday, and I'll be happy to get that up here. Hold on here 1 second. Here it is. We made a 61% retracement from the low on January 4th. That was also a 382 from the low in December. So you had an A, B, C, D, and two major ratios, 618 and 382 down there at 1353. The low was 1351, and now we're trading 15 cents higher this morning, and it looks like it's got a chance, to go higher. Now, if you're in that trade, you want to put your stop at 1360. That way, you lock in at least $350, and you won't have to worry about it. What you try to do on some of these trades is get your stop to break even just as soon as you possibly can. We did the gold trade yesterday while we were on the air. It had $1,000 profit while we were on the air. And I mentioned, to get your stop in so that you wouldn't lose anything. And, of course, it went back and took the stop out. And then it went to the exact spot where I had my stop, which was at 1874. Fortunately, I got back in this morning when we started to roll over. But, boy, I tell you, these markets are really jumping around, folks. I've been doing this for a long time. I don't think there's anybody – there's probably a few people that follow the markets as closely as I do. Is that Bradley Cowan you're talking about, Bo? Is that Bradley Cowan? I don't know. I haven't heard of him from a long time. Okay. No, Cowan is C-O-W-A-N. Sorry. All right. Let's move on here. Okay. Let's move over here and move over here to some of the other things. Okay, let's take a quick look here. Something's making a very big move this morning, folks, and it's very important because this is the platinum that we've been looking at. It's been quite bullish for some time, and I believe we're going to get to 1,200. Whether it's going to be today or not, I don't know, but we've been to 1157 today. We took out the highs of the last 3 weeks. That's a 1.618 expansion. And that may or may not be something important in platinum, but it's been bullish for a long time. And we have one subscriber over in Cairo that is heavily involved with that. He has a very large position on the long side of platinum, and he believes it's going to go to 1,200. And the patterns are certainly there to tell you that. Now, remember, platinum and gold are two different things. So you should be able to, watch it. Okay. All right. Let's move on here to a couple other things that look really interesting, but we'll cover those right after the break. We're going to talk just a tiny bit about Bitcoin because it's doing exactly what we thought it was going to do, and I think it's going to get to that 28,000 level very, very shortly. We're trading at 31,000 now. That's just a few trades away, so we could easily see that happening as is. Then I want to talk just a second about Google here when we come up. Let's get up here, and we'll watch this here when we get back from the break. We'll talk about this big breakout that we've had here in Google. That's a big thing to look at. 877-927-6648. I'll be happy to answer any questions. We'll have Tim Bost at the break.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I'm going to post a chart here. We talked about this Google for a second. You can see how it gapped above that trend line, into new high ground. I mean, that's a really bullish thing. But remember, Google is one of the 4 companies that control all of the media. So anything coming into that you have to read, that's why I don't read it, is because I don't want it to affect my thinking. I let the market try to tell me what's going on, and it's served me well over the years. But let's take a quick look at a couple others. Here is the one that we've been watching very, very closely. I did a special video on this because I thought the high was going to be 29,000 in the Hang Seng Index. We did hit 30,000, but we closed lower today, folks. At least that's what I saw in Bloomberg today. We did close lower at 29,700 or something like that. So that may or may not be. When you see this giddiness in the market, folks, you don't see it very often. But when you do, you have to realize that, what goes up must come down. And I'm not saying this is a top up in here because, I'm a sold out bear. Didn't lose anything on that puppy, but I'm still looking because I see things from the psychological point of view of the giddiness that's in the market now. I listened to Bloomberg yesterday, and they have these young people on. This young man was very, very smart, and he was talking, 40,000, 50,000 in the Dow, and maybe it's going to get there. I don't know. But I remember what Art Cashin told me once, and he said he never trusted anybody when he heard him on CNBC that was not old enough to shave. And he added the comment, that includes boys and girls. And he got reprimanded for that little joke. But anyway, now with this woke mentality that we have, I can certainly understand it. All right, let's stop and take a quick look here at the S&P. This is the S&P cash. I want to get this up here. Now, what we did yesterday is we had another gap up. You'll see this is a pretty big gap up, much like the one we had in November. And then you'll see that we went up. Now, if you go back historically, you're not going to find any gaps on the S&P, but we've got gaps going way back into April and May that have to be filled. Whether they will be filled in my lifetime, I don't know. But looking at this structure here, you can see we've made a 1.618 expansion of the whole month of September, from the 1st of September down to the 22nd, right there at the equinox. And then we made a 1.618 expansion of that yesterday. How much higher can it go? Who knows? But it could go higher, and that's what happened. But yesterday was extremely emotional. I think part of it was because of the fact that it was the inauguration, and so whether that was or not, I don't know. I was just watching the stuff, folks. I didn't, I was just, I try to observe what I think I'm seeing, and this is just like that thing about the negative interest rates, folks. We have some really problems here in this beautiful little pueblo of Tucson. Sarah and I had to go to the south side of the city yesterday for a moment, and we saw things that I didn't believe. It was like San Francisco. It was just very, very sad. And so anyway, that's it. We went over to the Gospel Mission. That's been, it was Big Holiday Inn that was taken over, and it's just a huge complex now. And yes, homelessness. That's exactly right, Duffy. And they're full. They're just the whole thing. I think they got 350 rooms, and it is absolutely packed. So. Okay, what I saw, Z, was a whole string of people with their little carts, with all their belongings on them, stacked about 4 or 5 feet high, sleeping on the sidewalks there along the side. We didn't see anything as far as, bodily functions or anything like that, but it was extreme poverty. And when you looked at the faces of those people, yes, it is new in Tucson. We've not seen that before. And they're reporting it, because Tucson's a nice place to live because the weather's nice. Even in the winter, we get very cold here. Last night it was 42 and it's raining today. So that's pretty tough when you're homeless. So that's it. Remember now, from what I understand, they're sending out credit cards for the money that the people are supposed to get. These homeless people, they don't get those because they don't have an address to pick it up from. And so that's not going to be a good thing. Well, anyway, that's what I'm looking at here in Tucson. It's very, very sad. And hadn't seen it before, but who knows? There's a park here that also has a big area for the homeless, down on the southern part of town. But this was right on the street. And, it was right near some businesses, so I don't know what the heck it means. Hey, over my pay grade, Mr. Z, over my pay grade. Mr. Z, I have a question for you, Bubba. Are you still bullish the beans? Because they just made a really nice retracement, little 5-day retracement, right at a 61% retracement at 1153. Excuse me. And now we're moving higher. So we'll see. We're keeping a watch on that one also because there's a lot of emotionalism out there, folks. And this leads to the volatility that I've been talking about for a long time. 2021 is going to be one of the wildest. And I think it'll probably set a record for volatility. I really do. And I wouldn't be surprised to see the volatility index trade above 80 sometime in 2021. That's it. So, well, I'll tell you, Mr. Z is asking if that bull market is over. I don't know, but I think the first sign that the bull market is over, that March beans closed below 1149. They're trading 1180 and change right now. So if they get below that, we'll see what's going on. Remember, the news follows the trend. That's in the same thing in the commodity markets, the same thing in the stock market, and all that stuff. So when you see this jubilance that's going on yesterday and you can't explain it, you just wait and see what happens. I mean, when you see, all of these things jumped up. Look at Netflix, what it did. Oh, my goodness, it had a huge move. Facebook didn't do very much. Microsoft didn't do very much. Apple, didn't do very much. But, Google did and Amazon did, and so did Netflix. So those three FANG stocks, and they're weighted. That NASDAQ is so weighted that's where you get these huge moves. So that's all I'm looking at here, boys. Just keeping a close eye on it because I'm a little skeptical when I see some of the things that I read in the news, and I guess skepticism is a good thing, but one never knows. That's why I try not to, to listen to the news as little as possible, because if I look at the chart, you can see what the heck's going on. Yesterday, when Google gapped up that much above that trend line like that, I mean, that was telling you that something big was going to happen, folks. And here I'm on a radio show and I'm short and the thing's going straight up, and I can't send anything out to anybody to lower the stop, which I don't think I would have. I still would have kept it at break even. But, that's the thing that you're seeing. When they get that much power with all these algo trading and stuff, you got to be really, really careful. So that's what my 2 cents is worth. We're going to have Tim Bost up here in just a little bit. Financial Cycles Weekly. He's done very well. We'll continue to have him on until he makes a mistake, and then we'll move into the retired section. Only joking, of course. 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have Tim Bost, Financial Cycles Weekly, on the air today. Tim, are you there?
I am indeed. Good morning, sir. How are you?
I am good, still living the dream on the green side of the grass.
That's the place to be, I tell you.
That's for sure. Tim, You posted a thing here on Timer Digest. I'm curious.
Last night, I received the final issue of Timer Digest. They have announced that they are ceasing publication after many, many years of serving all of us involved with the markets, and I wanted to give them a tip of the hat and a round of thanks for all the great work they've done over the years in tracking a variety of market timers in all disciplines, and very proud to have been among the top-ranked timers for a number of years with that publication.
Yeah,
but they have decided this is time to wrap things up.
Yeah, wow, it's strange that they're well, that's very surprising. Anyway, I see Steve Rhodes, Arch Crawford, we have them on. We've had Mark Leibowitz on, Bill Meridian, we've had him on. We have you on. Stan Harley's in there, so it's a rather prestigious group.
They've got, that's not a complete list of all the top timers. Of course, Bill Meridian was Timer of the Year in 2016. I had that honor in 2017. Arch Crawford, I think, did it a time or two. And so there are lots of the astrological community is well represented. So
yes,
we're very proud of that as well. Indeed,
it's a difficult discipline, but you do a great job with it. And so, you want to tell the folks what you're seeing here in the market? What is your
right.
What do you think is happening
first,
here?
In light of the transitions going on, I wanted to give a quick a nod to the transition in the presidency that we have just been a part of the last day or two here. And during Donald Trump's presidency, we were tracking the Dow Jones Industrial Average because there's been a substantial gain in the markets, of course, during his administration, up 56% for the duration. But I got curious and looked at the first terms of several other presidents, notably Dwight Eisenhower back in the 50s. During just his first term, the Dow was up 65%. During Barack Obama's first term, the Dow gained 72%. And during Bill Clinton's first term, the Dow gained 114%. So I think it's helpful to put things in perspective. and certainly when you have two-term presidents, Ronald Reagan's second term was quite phenomenal in terms of market increase. But it's an interesting point of comparison here. So we've been looking at some of the economic challenges and the market dynamics, and of course the market is not the economy, but been very, very good to see the increases in the market over the last 4 years. But again, compared to previous performances, not such a big deal. Maybe so. We'll leave it at that. We don't have an axe to grind or a point to make there. Just I was playing with those figures and saying, this is kind of interesting there. So with the market as a whole right now, we're continuing to see these planetary dynamics bounding and defining the movement of prices, and we like to track the S&P with this. And in this case, what we're looking at here are Mars and Uranus price lines on the chart. The Mars lines are kind of the curvy red lines representing the position of Mars in harmonic projections, and then those more or less horizontal purple lines indicate the positions of Uranus. And we wanted to look at this specifically because yesterday, a few hours before the oath of office, we had an exact Mars-Uranus conjunction. And this is a particularly powerful stress point, and that was right on the midheaven at the time of the oath of office. So kind of an ominous signal in terms of the potential for tension in the markets and potential for violence in the environment as well. And of course, in Washington, D.C., things went pretty much overboard in terms of trying to quell any potential possibility of violence, but that seemed to work pretty well. And so we're looking at that then as a potential for a short-term trading top. Now, what we've put in here is the Uranus lines above and below where we're trading right now. We're looking at a resistance position here of 39.65. and then potential support with a pullback back to 35.15. Our projection is that we'll see continuing selling pressure in the markets, especially if we break below last week's low, and that could continue into the 10th of February. That's when we have that Poseidon retrograde station, and we're looking for that to be a pretty major inflection point with the markets. And then after that, I've got kind of a straight dotted line going upward there, but it would be more of a stair-step kind of fashion, projecting an intermediate high around the 26th of March. So that's our projection at this point. Again, using these planetary price lines gives us a way of projecting the support and resistance with any market that we're dealing with. Then what we like to do is take that and then combine that with Fibonacci analysis and other tools. And when we begin to see a correspondence between the astrological indicators and other indicators, it acts as a level of confirmation, and that helps set up tradable situations.
Tim, now that you've sent us this chart, that forces you to be on the show on February 10th.
I think we'd already scheduled that.
Yes, we have. I just wanted to remind you because, if you don't get this right, the vegetables are going to be coming towards the stage. So you got to be careful. But no, you've been pretty good. So, I have to say that, you're pretty good. Speaking of Timer Digest, I guess Steve Rhodes is on the cover of the last issue. So that's a nice thing to be on the cover of Timer Digest.
Actually, it was Marcus Rhodes, Marcus Rose, not Steve Rhodes. He was the Timer of the year for 2020.
Oh, okay. Yeah. He's a very astute astrologer.
Yeah, exactly.
Yeah, sure is. Yeah. Right. Look at the astrologers in it. Probably half of them were looking at astro stuff. So, exactly. Edward Dewey, the Foundation for the Study of Cycles. He was very heavily influenced by astrology, and this was back in the 40s.
Right.
But he never published very much because of the fact that it was a little too close to esoteria, and he didn't want to get a thing like "I have newt toe of frog" type thing over his head. So, but he did do a lot of that. You don't get that much anymore. Most people have some degree of acceptability that something is happening that make this work. Reagan's wife, Nancy, was really heavily into astrology, and they had their own astrologer. What was her name? Was it Jeannie Dixon?
Joan Quigley. Joan Quigley was.
Okay.
Right,
she was from California, as I recall, right?
Right. She was pretty accomplished, and prior to her death, she and I collaborated on a couple of projects along the way when she was doing research for unnamed governmental bodies in the Middle East. So interesting.
Hey, stay tuned. We have to pay a few bills. We'll be right back with Tim Bost, Financial Cycles Weekly.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, and we're talking with Tim Bost, Financial Cycles Weekly. Tim, we had a question from someone dropped me an email. David said, what do you see in the next 2 to 3 months in the stock market? You did a pretty good job here for the next 2 months because you're looking into March, so that pretty much covers exactly what that question was, and that means we should pull down a little bit into February and then go back up into the equinox into March. Is that correct?
Right. Yeah, we're looking for that to be a potential move upward into the latter days of March. And then following that, we're looking for a bit of a pullback into early April, and then a trading bottom coming in. Looks like about April 3rd or so, with another kind of a choppy move upward. We're looking for a intermediate term top coming in around the 8th of May there. We've got a Mars-Hades conjunction that I'm watching as a potential trading top there on the 8th of Mars, or on the 8th of May, rather, and then heading down again into the solar eclipse, which comes in about the 10th of June. So over the next 6 months, generally an upward trend, but we're going to be paying close attention to that old adage, sell in May and go away, especially with the likelihood of a significant top coming in early May.
Yes, thank you. That's very good. Now, one other question that I wanted to ask you about your overall view of the volatility that we're seeing. We're seeing these tremendous moves like we saw yesterday. Is this, in line with what we're seeing astrologically?
Well, it's interesting because I mentioned earlier the Mars-Uranus conjunction that occurred yesterday, and the potential for violence, but that's also a potential for volatility as well. Mars is about taking action and making things move, and Uranus is about big surprises. And so if we get a surprise attack, it's one thing, but we can also get surprising swings in the market dynamics, and we're really paying a lot of attention to the Uranus picture here overall as a factor. When we're looking at that chart for the S&P in our first segment here today, we were looking at that planetary support and resistance defined by Uranus, which again is the planet most clearly associated with volatility. So in a nutshell, the answer is yes, more volatility.
Okay, good. Now we'll take a switch over to Bitcoin now, and that's been a wild little puppy. We've gone from 10,000 to 42,000, and what do you think is going to happen here?
Well, I put a note there in the middle of that chart for today, the first of or the 21st of January, and I checked the price when I put this chart up. This was as of about an hour and a half ago. It was at 32,634. I just checked it a minute ago. It's now at 31,600, and so in the course of an hour, you can get a 1,000-point move. With Bitcoin, it is definitely an erratic and exciting market to play with here. In this case, we're looking at the Mars planetary price lines along with Chronos, the trans-Neptunian factor, and that's proven to be pretty interesting in terms of defining support and resistance. Down at the bottom of the chart at the left there, you can see that extended period when it was pretty much trading flat before recent months, and that Chronos line, the horizontal purple line there near the bottom, was neatly defining that. And so we're looking to those Chronos planetary price lines then to help us define potential areas of support and resistance. And of course, that top resistance line at 41,730, it kind of kissed that and backed off, and then we have that secondary level there below that at 37,200 and change. But what's going on right now is we're seeing this pullback, and we've seen this tested recently, pull back to around the 30,000 mark. And then things rebounded neatly from that. And we're talking a matter of hours and days here with these moves. So it's unless you're tracking it very, very intensely, it's easy to miss out on some of these. But what's looking like is we're going to see that support level defined at around 30,000. Planetarily, we're looking here at the Chronos line giving us support at 28,230. So if we drop below 30,000, my expectation is that that's a psychological barrier that will create more selling pressure, and we could see a move to the downside coming out of that temporarily. But I'm still very, very bullish in terms of the longer-term expectations with Bitcoin, and especially since Coinbase announced in late December that they were planning for an IPO, which is one of the big Bitcoin brokerages Bitcoin exchanges, that they there's a broader level of interest which is helping to support things here. So remaining very bullish, and certainly as we drop back down to the 30,000 mark and perhaps a little bit below that, I'm looking at this as a buying opportunity.
Wow, I tell you, it's a beautiful ABCD there, 28,200. So that's what I'll be watching. Now we've got next topic here is Mercury retrograde. That's one of my old favorite things to look at. You want to tell the folks?
We just want to do a little bit of a sneak preview here because we'll be talking again on the 10th of February. At that point, Mercury will be retrograde. And in fact, on the 30th of January here, we've got Mercury beginning its retrograde cycle with the retrograde station on the 30th at 26 degrees, 29 minutes of Aquarius. This past week, we had what I call the pre-retrograde point, which was at 11 degrees of Aquarius. That coincides with the direct station when Mercury ends its retrograde motion on the 20th of February. So it's like it passes that point in the zodiac, and that's what happened this past week, and then moves backwards from that point on January 30th. So then taking it in sequence, on the 15th last week, we had that passage over the 11 degrees of Aquarius mark. It'll move on up to the 30th of January at 26 degrees of Aquarius, where it will begin backwards motion. Then on the 8th of February, we have what we call the inferior conjunction. This is the meeting of the Sun and Mercury, the two conjoining while Mercury is retrograde. Very important point there on the 8th of February, and that's one of the reasons it reinforces that potential for a market bottom at that point, or within the next a couple of days of that. We're looking for it to come in about the 10th there. That'll be at 20 degrees of Aquarius. Then the Mercury retrograde period is officially over on the 20th of February with a direct station at 11 degrees of Aquarius. So between January 30th and February 20th is what we conventionally refer to as the Mercury retrograde period. And of course, we need to be cautious in our trading and our communications and transportation, and a general ability to connect with other people is impaired somewhat then as well.
Okay, stay with us, Tim, and we'll be right back and with Tim Bost, Financial Cycles Weekly.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
Whatever you think about, you bring about. Whatever you focus on grows.
you see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archived workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. Tim, I have a question about the those 8 things that you put up there. Now, is February 8th the most powerful of all those 6 things that you put up about Mercury retrograde?
Well, it's interesting. We look at that inferior conjunction with Mercury retrograde and compare that to the superior conjunction, which comes up on April 18th. Oftentimes, what we will see is a correspondence in trading price levels that occurs with those 2 dates. So we'll be watching the markets, and this seems to work especially well in trading gold. I found that to be particularly receptive to that. It's one of the topics that we cover in my book, Mercury, Money, and the Markets, which is available on Amazon. It goes into some detail explaining this phenomenon. And it's based on the old esoteric adage, as above, so below. And so we got the below is the inferior conjunction, so to speak, and then above comes in on the 18th of April with the superior conjunction. The difference is basically the position of Mercury on this side of the sun or the opposite side of the sun in terms of our perspective. And the retrograde, Mercury is always retrograde at the inferior conjunction. Mercury is in direct motion at the superior conjunction. That's why we add that to the mix here with these list of key Mercury retrograde dates. Conventionally, we'd just be looking at January 30th to February 20th and saying, okay, Mercury's retrograde, watch out. And then we have coming out of the shadow, so to speak, on March the 13th, at the retrograde return, when Mercury gets back to the place where it actually started the retrograde motion. That's a significant date. But we like to watch that inferior-superior conjunction series as well as a part of that cycle, which gives us some interesting trading opportunities.
Hey, that's great. You got any free webinars coming up for the folks?
We do. We've got some planned for the coming week here, and we've actually set up a special access to listeners of this program. Go to bit.ly/Tim Larry P, capital T, capital L, capital P, and that'll get you connected.
Thanks a lot, pal. Listen, we'll see you on February 10th. Have your magic hat on so we'll be able to see what the market's going to do.
Looking forward to it. We'll wear the cape.
Thanks a lot, buddy.
Okay, bye-bye.
You bet. Tim Bost, Financial Cycles Weekly, folks. Live every day in an attitude of gratitude, and may God bless.